Welcome back to Morning Brief, brought to you by Invesco. Several years of high inflation is still an issue, and it's impacting the business of snacks. Shares of PepsiCo are falling this morning after missing revenue expectations and trimming its full-year guidance. Yahoo Finance executive editor Brian Sozzi got the chance to speak with PepsiCo's chairman and CEO Ramon Laguarta on the latest quarter. Sozzi just hopped off the phone a few minutes ago. What did you hear?
Yeah, I did just hop off the phone. Doing that work today, Shauna. Earnings season has started, and Pepsi earnings are kicking this off. It's no more Alcoa. It is PepsiCo. So I think investors are seeing a little bit of a reversal in shares of PepsiCo. I'm here to hopefully help you make sense of what you are seeing with four top takeaways. You see a lot of consumers enjoying muscle milk, which is now owned by PepsiCo. First up, snackflation, as I call it, is still very much a problem. Ramon told me on the phone. Now, this is as a result of a lot of packaged food companies having raised prices during the pandemic, and a lot of those prices for potato chips, pretzels, Tostitos, you name it. And it's not just a PepsiCo thing. These prices are still staying high. That's where I think you're going to see PepsiCo really go out there and market very aggressively. Lower prices around the Super Bowl, most notably, Ramon told me. Cost cuts are in the cards. Coming up at PepsiCo, this is a company that had always cut costs. I think you're going to really see them drill down and find new ways to cut costs, especially around automation to improve their margins with sales a little bit under pressure. I think why you're seeing the earnings, or the stock price, I should say, this morning reverse compared to initially it being down. Earnings, the company still reaffirmed its outlook for earnings this year, up about 8%. I think that's in part because they're going to be out here cutting costs to help support that bottom line. Also, PepsiCo, historically a very aggressive buyer of its stock. And then I did ask Ramon about some chirpings returning to Wall Street about the need for PepsiCo to break up. Of course, this is a beverage business and a snacks business that owns Frito-Lay. They also own Quaker Foods. Ramon saying that is not in the cards, not something they're looking at. This has always been a point of contention with many analysts on the street. Ramon saying, no, we're not going that route. And then I mentioned a lot of pressure on the consumer here, and I thought this quote from Ramon was very interesting. He's saying we see that the consumer is very challenged and that the consumer is making a lot of decisions. They're optimizing their full budget, and they're also, so they might be cutting on food to pay for their subscriptions, interesting, or they might be cutting on food to go see movies on the weekend, and really there's a lot of trade-offs they're making when it comes to food. So you may go to the supermarket, you may see that $5 bag of chips. For a lot of households out there, that is still very much an expensive purchase. And Shauna, I know you might like this, but I did have a new picture here of a new Frito-Lay offering, some new spicy chips. Ooh. That maybe, to me, seems like an affordable purchase. I'm excited to try them because why not? I'm all about product innovation in food.
I'm all about product innovation in food, especially when it comes to chips. I'm always game to try new products. Saz, I'm curious just to get your perspective, though. We were looking to this earnings season, very, very early in the earnings season. Pepsi really giving us this first look here about whether or not, though, we were going to see some of these consumer staples names regain momentum. Do you think that kind of quiets or eases some of the expectations there? Maybe this quarter isn't going to live up to some of those lofty expectations, and that we would have potentially seen that rebound in the consumer.
I love that you asked me the tough questions, and really good chart here. Let me break down what you are in fact seeing. Really, PepsiCo shares have been underperforming the broader market this year. You see Coca-Cola, its longtime rival, those shares are doing well. Simple reason why. Coca-Cola is just a beverage business, and we're seeing beverage sales continue to be strong. Coca-Cola's first half of the year, very strong. PepsiCo's results being held back by the snacks business like we saw today. So investors are rewarding Coca-Cola, not rewarding PepsiCo. But both of these stocks are not doing relatively great versus the S&P 500. And to your point or question, Shauna, it's a really hard case to be made that you're going to see a reacceleration in packaged food volumes and acceleration in packaged food earnings for the balance of this year, in large part because inflation is still a thing and consumers are still challenged.
All right, Saz, great stuff. Thanks so much for bringing us the latest commentary there from Pepsi.